Good day, traders. I trust you are well. I've got a couple of things I want to share with you today. The first thing, of course, live trading profits. We are in the market. I'm always hoping that I can show you some live trades or execute some live trades. But what is strange, strange if you're not used to price action, not strange if you understand what's happening in the global market. US Thanksgiving is really just thrown a bit of turmoil in the markets. But that's common, that's normal. Other markets are open, but just the lack of their volumes, always creates some interesting dynamics. And it looks like everyone kind of sits back and waits a little bit. So have a quick look at my thinking. I took a trade earlier on, closed it, and I didn't take some trades. And here is the reasoning, the reason why. So this is S&P 500. So it's interesting with depending on which broker you have. With our brokers, even if the markets are closed, there's continual trade around the market in a particular market. So this is the market so far. I mean, look at that. This is taking place in the Asian session. You really couldn't have done much there. A bit of movement at the open of the UK markets, and that is not the way to spell trading. I'll just change that. Trading range. So, I mean, for those that know me, I love my work and I love what I do. So, I write to my charts and I create PowerPoint slides and all of that stuff. So the trading range open, and that was the key high of the session after the open UK session. And that presents a level of resistance. So, with this rally taking place, I mean, the initial setup was here, but straight into resistance, I'm not going to do that. So I let it go, and it went up, spike in channel. Now it's coming back. I'm looking to short at the moment. And where would I short? I need to see within this trading range that is forming itself. I should be yellow so you can see easier. I just need to see some double tops. And if I see a double top that is decent enough, I'll look to take the trade. So, if the bears are strong, give me another candle. Small candle, doesn't matter. Small tail, pull back, create a double top somewhere within here. Then I can look to short and accelerate down. If they just keep going down without a pullback, well, you got to change your mind somewhere along the way and say, we might get a double bottom. If we get a double bottom down here, then we'll look for a high low to trade, because now we have a bigger range. I mean, at that point, when that was a high, if you took that trade with your stop at a technical level, 1-to-1 is way above where you got to, but you wouldn't have seen that. So that's not a good trade to take. So you would have had to wait. Another market that I'm actively looking at, which I'm going to show you something which I think you're going to love, is the CAD. So unlike with indexes, when an exchange opens, I use my magenta line to mark the open of the exchange so I can see what the traders trading that exchange are seeing. With currencies, metals, etc., I just mark the open of the day. So that was the actual open of the day. Boom. Beautiful rally. I mean, you would have loved this if you're trading this, Asian daytime. Fantastic ways to have gotten in there. Picked up a couple of points if you could. So with that open bear candle, I'm thinking, well, the market is bearish, but we need to find how to get into the market. We got that 2-bar reversal again at that point. Okay, let's just draw another line. That was the low of the session. So you can't sell into that. So you wait. If that had created that double top I was speaking about within here and given us at least a 1-to-1 to get to there, would have sold it. But we didn't get that, so just let it go. Scalpers in and out. You could sell there, and as soon as it starts to turn, you exit. But I'm looking to hold on to swing. So failed breakout beneath the open of the day. I'm still short, still bearish on this market. 6-7 bull candles above the EMA. So now it's setting up pretty nicely. If I get a test of that level, a double top at that level, my stop will be above here, then I can look to jump into that and short. DAX, interesting story. So we are in a, sometimes you must just crunch up your charts and say, what is happening? What am I missing? So when I did that, I said, well, hang on a second. We got a bit of a bull channel here, 3-day bull channel. So maybe that might prove to be a level of support. And it did. So these are, I write on my charts. Okay, so trading range open, it was bearish, but big bear candle. So you got to wait to see, if we get a breakout beneath it and breakout pullback I1, and then you trade. Then, of course, we had, that bull channel. We tried to test it with a micro wedge bottom. Micro means small. 3 times market went down, 1, 2, 3. Test, came back, slid down, failed breakout. Man, I was as ready as could be. I said, this is beautiful. All I need is the market to go up. Pull back, give me a higher low, double bottom, boom, and trade. We didn't get it, which happens sometimes. So as the market was accelerating up, I said, okay, I need to at least see if I can see a 1-to-1 to the top of the trading range. If I could see that, then I could quickly jump in and at least try and capitalize on it. So as the market was closing there, I did that. And I said, 1-to-1 is just above, a little bit risky. Let it go. So if, let's say, 1-to-1 was within here, that would have been good to jump in. Even if a pullback came, you could hold through it. Now, interesting thing happened on UK 100. You got to absolutely love. Look at all this beautiful analysis. Perfect doji at the open, don't do anything. It's a trading range open. Okay, so that's the first candle of the US markets. Bears try to sell off, created another wedge bottom, 1, 2, 3, with Asian market session, pre-market open, whatever you want to call it. Then we also have a 3-day macro wedge support. Okay, let me show you. Look at that. Once you scrunch it up, okay, now it's all got my writing there, so it looks a bit unneat. But before the market got down to here, I had scrunched up my chest. Said, well, there's something else here. The market went down here, went down yesterday, and maybe if we test that level or that level, we have a 3-day macro wedge, big wedge, 1, 2, 3. And if we have a 3-day macro wedge, if I get a decent enough reversal and I get a breakout pullback I1, then we can jump into it. Breakout pullback that I talk about, something like this, if you're in the market breakout, market pulls back, and then you can jump in, goes up, jump in. Okay, if you don't get that, then you're trading a breakout. It's different mindset. So I saw the market coming to that blue line, that 3-day macro wedge, and the bear has been very weak and creating another little wedge test here. And I said, fantastic. If we accelerate off here and I get a breakout pullback I1, I'm going to jump in. That level was my level of resistance. So I wanted at least to get, just to see at least a potential 1-to-1 up to there. You're going to find this funny. So I'm sitting and waiting. I'm saying, okay, maybe after this, all I need is just a pullback, a test of the EMA, and I can jump in and be able to take that trade. This candle closed, and I thought, man, we're not going to get the pullback. So do I have at least a 1-to-1 to try and get to the top? And I had at least a 1-to-1. I said, okay, now it's worthwhile to take it. I'm just going to buy at the market and then hold it and see if we get there. And look at what happened. I got slipped out. I mean, I got it, not slipped, a very, very bad fill. So try to buy at the market and it gapped up to there. And by the time I looked down at my full risk was more than my initial, which was almost like, 1.8 times the risk. And I said, my goodness, what happened to that? Because I can see where the stop is. So because of that, as it pulled back, if it had gone all the way down, I've been still up more than my risk. So I went and closed the trade. If I had been filled here where I entered without the bad fill, would have stayed in the market, just pulled the stop up, and I think I wouldn't have been stopped out. But it happens, so don't worry about it. But here's the thing: when I realize either I got a bad fill, or I take a trade and I say, "Oh, George, that just was not. You moved too fast." I get out quickly. I've learned it's better to get out quickly than to wait and say, "Oh, okay, it's going my way." So that was a bad fill. If it had gone all be wrong, I would have been very upset. So just close the trade. Now, that's where we presently are. Well, what am I looking at? I'm still with this market now because we failed to break out. above the high. That's a failed breakout. I am looking for ways to short. It's a trading range day so far, which means if I get a decent enough setup. So imagine if we pull back here, okay, and even if you get a huge bear candle, got enough room. I mean, that's 1-to-1 at the very least before you get to the why 1-to-1. Because if you take the trade and you get more than 1-to-1, there's usually a chance that it accelerates, it pulls back somewhere and gives you an opportunity to get, scale into your trades with the other one and break even, and you make a little bit more money. So worthwhile to wait. And if we don't get that, if the bulls are strong, well, if the bulls are strong, they're going to have to give me bull acceleration, weak collapse by the bears, double bottom, we're starting all over again, and potentially new market. That's where we are in the market. I want to show you something quickly. I think this will help. Now, I do a lot of research, if that makes sense. Whenever I'm in the market or just I'm not getting a sense of something, and okay, let me stop that and share afresh. So whenever I'm in the market and I'm trading a market and I'm just missing it, I go and do research. So yesterday, because for a long while I've just been trading indexes, and now I brought in currency. For me, whether I bring in a currency or a product like gold, they work the same. 24/7 markets, they work like currency. So choose any currency that you want. I did my own little bit of background and I chose the Canadian. So I'm going to trade the US CAD. That's going to be the currency I'm going to trade. It's price action. It could have been oranges or bananas. Who cares? So sitting there and I'm saying, I just need to get to the rhythm of this market, because I know how the indexes work. I know when the exchanges open. I know when things quiet down. European open, UK open, boom, 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 things quiet down middle of the day. US markets come in, there's energy. So I've got a very good sense of that. But with the currencies, you need to get a sense of that. So I decided, well, yesterday the markets were pretty slow, around 4 or 5 p.m. my time. That's usually when the US session is opening, and there was no US session because of Thanksgiving. So, well, I'm going to use the next 4 hours just to do some research. So I did 4 hours there, I did 2 hours this morning. So a total of 6 hours I spent doing this. What I look for is what I call a super trade or an incipient trade. A super trade is if you happen to catch a trend that runs for the day and you've caught that trade at the beginning, you can make huge amounts of money. Okay. There are other trades, but if you can look for those super trades, they are not there every day because the market ranges, things reverse, etc. But try and find those. So I said, well, I'm going to go and look at the 21 days. I think it was the 22 days in October. I'm going to just get a sense of what happens in the market in my time. Okay. So my rule would be that I want to try and find a super trade within the first 2 hours of the European Open, tighten the stop to extreme so I have the risk, move stop to break even after a distinct high, low, low, high of the 10 EMA, then try and hold it until the end of the UK session, so about 7 to 8 p.m. local my time. So in these examples, using 1% risk, the results for the month of October, if your mindset was to look for this kind of trades on this particular currency, you would have yielded 27% easily. Or 39.3. There's a couple other trades, on 2nd October. I'll quickly run through them. But there's also additional profit potentials. I want to look at the trades you can take in the first 2 hours. There's other trades that come later on during the day. So the reason I'm showing you this is that you've got to learn to do your own research, okay, around the markets that you trade. That's how you're going to get really good at it, and that's how you're going to make a lot of money. So here's the research. I was going to do October and November, but I ran out of hours. I had 4 hours last night and 2 hours this morning, and that's it. I think I've got the insight. I'm not going to do November. So I'm already I can formulate my way of trading. The price action doesn't change, but the level of focus changes. So I'm trying to find a super trade in the first 2 hours. On this particular day, beginning of October, that would have been one entry. If you missed that, you could have taken that or that and then just held it throughout the day. Okay, other trades would have come in. So if you just had that one trade, 6.3 to 1, if you added the other ones, which I said either 27% or 38%. So 27% is the lowest you could have earned in that month just by finding a trade and managing it. Now, they're not always this beautiful. There's always other things. So the next day, I'm going to rattle through this. The next day, I mean, after the first day, and you like, I got this. I'm going to make a fortune. Look at this day one. You go to the next day, and the next day, in that same period, your only yield is 1% because you'd have taken that first trade, legitimate trade, and the market turned and reversed. You'd have been stopped out, probably break even, with slippage and whatever the case may be. But you would have said, okay, got it wrong. Now the market is going up. Now, this is a classic one that I was telling you about earlier on. I look for a breakout, a pullback in the high one. When it just goes up and up like that, there's no opportunity. So there would have been fantastic. Breakout, pullback, high one. You then get out at this reversal, yield 1%. Okay, on this particular day, and that's the thing about it, in the first 2 hours, no super trades set up. So you're not going to be finding these super trades at every single moment. Sometimes they're there, sometimes they're not. But you know that if you're just consistent, you want to pick them up. Remember, there are other trades which I didn't factor into that profit potential. So somewhere in, depending where you're at and your time zone, remember, by the way, the other thing, this line here marks the European session. So I didn't even look at other trade potentials. I mean, these are trades here that could have taken place during Asian session time. So there's a lot more other trades that you can pick up. Okay, so nothing in this particular window on that early trade. This particular day would have been stopped out at break even. I would have taken the trade there in the way that I trade when I get that reversal. Stop would have been a break even, I would have exited. And then the market turned around and said, oh man, quickly get in, decide where to put my stop. And I would have been rewarded with that by the time I get out again, 1.5. This is all trades in the first 2 hours. Okay. And then get stopped out. There's other trades I didn't factor in that you could take in. Today's yield, 0% on this one. You can see a bull trend in the Asian session. Would have jumped in, short in here and tried to hold on, and then it reverses, then you gotta get out. I still break even, because maybe might have been slipped up, but maybe it's 0.25% profit, but that's still fine. On this particular day, you take that trade, you exit there, you bank 1%. This day, you take that trade, you hold through that. This happens quite a lot. That's why you got to leave your stop, accelerates down, and you hoping it keeps going down. Market turns. When you get something like that, boom, just close your trade. You banked 1%. Today, no super trades in the first 2 hours. Just choppy and change. So just jump in and say, oh, there's a super trade. It's got a setup. If it's not there, it's not there. You might find something later on. Here, took a trade here and stopped out. So you'd have pulled your stop up to the extreme, and I got stopped out. You'd have been stopped out somewhere there. Even if you tried to close it early, you'd have been losing money. So here, minus 0.5%. If it had just turned aggressively, it could have been minus 1%. So that's also, I mean, you can lose money depending on how you manage the trades. On this one, beautiful, you open first candle, you short it, and then it pulls back and you've tightened your stop as it's reversing 1% yield. On this particular day, today's yield would have been 2% for that trade. Beautiful trade, double top with high, double top with an earlier high in the Asian session. And then you just let it roll because it's a small pullback channel, so it's a very tight channel. Until it reverses there, you'd have banked your 2 to 1. On this day, yield 2%. So you kind of get in the sense, take the trade, exit there. Other trades you could have taken after the news breakouts. Here, manual stop 1 to 1. You take that trade, you agonize through all of this. Eventually, it accelerates down and you get out. When the market is doing this, there's no point in closing the trade. Just let it work, let it work. If you get stopped out, you get stopped out. But if it starts to go down, then you tighten your stop, bank your 1%. Nothing here, nothing in the window that you could have traded as Well, when I say trade, basically the way that I trade, nothing that's set up that I want to jump into. So nothing there. I mean, other trades came later, beautiful trade much later on. 2% yield here, that trade, beautiful, accelerates down. You can add in, or you can maybe just take that as the trade. So whether you take that or that, by the time you get there, get a 2-to-1 yield. Remember, I'm assuming 2% risk. Here, beautiful trade, take that, exit there. If you fast, this is now after the 2 hours fee, quick enough, then you must buy here, okay, and then sell here. There's other trades. So even after putting my 6 hours of work, I haven't finished notating the other trades. 1% here, take there, exit there, still goes up a little bit higher. Why do you exit here? Because you don't know this is going to happen. So you've seen a decent reversal, you've tightened your stop, boom, and you're the other thinking is, once it gets to break even, just leave it and hopefully you get that. But more often than not, the market comes and takes you out. So if you see what I call a major trend reversal setting out, then you must get out of the trade. 1.5%, you take this trade, you see that, you exit quickly at break even. If you don't exit quickly at break even, by the time you see that, you get out. So this could actually have been a minus 0.5 if you're not paying attention. After, in fact, no, it will be less because your stop has to be up there. But still, there will be a bit of a loss. But if you're quick enough, why would you be quick enough? Because when you take a trade, you watch it, you hope it accelerates down. When it turns, you must get out. But even if you don't, so maybe that could have been minus 0.5. So that yield could have been 1, because that would have been beautiful. Exit there, plus other things that you could have done. 1%, take it there, exit there. 1.5%, beautiful setup. Take it there, exit there as the market starts to go up. Trend reversal, 1-to-1, 1-to-1, you get out there. And I think there is just one more. Okay, so that's a beautiful one. You take that, stop is above here. By the time you get to here, your stop is at break even, you take it again, you exit there. So then the thinking is what I, sorry, I'm over time. The thinking, I'm just trying to drop a thought in your mind that the idea is not to add tons of charts to look at. If your mind can process that, by all means do that. If the strategy that you are following requires you to look at multiple charts, by all means do that. But if you trade in the 5-minute chart, if you trade in price action, you just need a handful of charts, and there are opportunities in all of them. I've dabbled with many markets, but I said, well, I've got 3 indexes that I absolutely love. Instead of having 5 extra currencies or whatever, I'm just going to choose one. And I chose the CAD. What was part of the reason of choosing the CAD? Well, it's got gold in from mining, it's got oil in from mining. It's part of the US system, USD index. So I just think it's a beautiful currency to watch on. I know there'll be days when there's no trades, but I really want to just focus on it, and finding trades in the first 2 hours will yield a lot, let alone all the other things. Now, this took 6 hours of work to do. You don't have to do that, but if you're free over the weekend, whatever chart you are trading, just go and pick a month. If you're trading on the 5-minute, if you're trading on the daily, pick a quarter, right? Pick a quarter and just put it up and say, what am I seeing? What can I learn from this? How can I improve my trading so I can find my things? And that's the only way you're going to extract the wealth from the market. Marlon, thank you very much for hosting me over time. And guys, thank you very much for hanging in. Sincerely appreciate it. I know I'm 10 minutes over, but I thought you'd enjoy it. And yeah, things are still setting up. So we haven't missed anything in terms of the live shows, live trades. Thank you very much. No posts, no questions. Marlon, thank you. We'll see you guys again in December next week. Bye-bye. Take care, everyone. Cheers.